Hi guys, I'm Rohit Jorigal and welcome to my YouTube channel, a place where learning finance is the new passion. So guys, in this video we are going to understand the concept of risk and return. Guys, you must have seen my thumbnail in which I said 21 din mein paisa double, correct? Which reminded you about the movie Fir Hera Feri, in which Akshay Kumar gives his 1 crore rupees to Bipasha Basu for that double return, right? But guys, for high returns, he took a very big risk, correct? Now wherever there is a high return possibility, you have to take a very big risk. But please analyze that don't take too much big risk, and in that case you will never get your returns back. So you have to analyze the risk involved whenever you are investing your money anywhere, as well as you have to understand what are the returns you are going to get back. Now take a thumb rule of finance. Whenever you are having a high risk, you become eligible for high returns, and whenever you are taking a very low risk, then you are only eligible to a low return. Okay. Now every financial decision that you make in the market will definitely have two aspects. One is how much the risk is involved, and the second one, how much returns are you going to get. However, the risk can vary with different types of financial instruments. Like if you are investing in an FD, there is very less risk, and that is why you get very less returns also comparably. But if you invest in a stock market, you buy company shares, the risk involved is very high, and that is the reason you can get more returns from the stock market investments. So guys, in this video we are going to mainly focus upon the types of risks that you can come across when you are making any financial investment. Because guys, I think that whenever you are making a decision about financial investment, then please analyze the risk, and then if that risk is okay with you, then only go ahead and invest in that financial instrument. There are 4 major risks. Number 1, capital risk. Number 2, income risk. Number 3, default risk. And number 4, other business risks. Other business risks are nothing but whenever you start your own company, you start your own business, then those risks, whatever are associated with your business, will be categorized under the other business risks. Okay, so we'll also cover them in the last section of the video. Coming to the first one, capital risk. Capital risk is nothing but whenever you invest your money somewhere to buy an asset, the market value of that asset becomes so low that it becomes nearly zero. For example, if you have bought a company share at 100 rupees level and it has gone down to 2 rupees per level. Now you had invested a capital of 100 rupees and it has gone down to 2 rupees, correct? There is a capital loss, and this risk is nothing but your capital risk, in which the market value of your asset will go down, and thus the capital that you invest also goes down. Coming to the second one, income risk. Income risk is nothing but the variation in the income that you are going to get when you invest your amount of money at some financial instrument. Now let us understand this with a simple example. Suppose you have invested in a share of a company, and that company is giving dividends. Now in this year it has only given you 1000 rupees dividend, and next year it has decided not to give any dividend. It is the company's choice whether to give the dividend or not. Now suppose next year if it is not given any dividend, your income will become zero in the next year, correct? There is a variation in the income, and this variation is nothing but termed as your income risk. So guys, whenever you are deciding a financial instrument to invest your money, please consider all these risks and then only invest in them. If you are investing in a company for dividends, then make sure that the history of that company is paying out good dividends and a constant dividend. Coming to the next one, default risk. The word default says that someone has defaulted in the payment of the money, correct? Now, whenever you are investing your money in like an FD in a bank, now if suppose tomorrow the bank has shut down, it has closed down, now that FD amount is also gone, and the interest on that FD is also gone. So in this way the bank has defaulted, right? So that is the reason we all save our money in top banks, correct? Because we know that if you are putting all your money in a top bank or a big bank, then you are not going to have that default risk because your money is going to be safe. But if you go to a very small bank which you have not even heard about, correct, the default risk in those banks is very high. because you never know when your money is going to vanish out from there. Coming to the last one, other business risks. Now these are the risks associated with any business. Suppose you open a company tomorrow and you drive your own business, then these can be the risks associated with your own business. And suppose example, if you are investing in a company shares, you want to buy a company shares, and before buying you want to analyze the company's business. So while analyzing all the financial statements and everything, you also must analyze what are the risks to that business, because if there are more risks and high risks to that business, then definitely that business will come down, and ultimately the share price of the company will also come down, correct? So before investing in a company's shares or in a company's business, you must definitely go through what are the different types of business risks the company has. In these business risks, the first one is the business portfolio risks. Portfolio means what are the different kinds of products or what are the different kinds of income sources for the business. Suppose I own a business and I have a small general store and I'm only selling biscuits. There are no kind of other products in my shop, and there is a shop next to my own shop, and that guy is selling everything: biscuits, cold drinks, chocolates, etc. Now whose business do you think will be better? His, of course, because the portfolio of his business is large. Suppose biscuits are not selling, then maybe cold drinks will sell, or maybe cold drinks are not selling, then chocolates will sell, correct? But if I am only having biscuits and these are not selling, my income will become zero. But in that case, the other guy's business case, that person, even if he is not earning from biscuits, he will definitely earn from cold drinks and chocolates. So the business risks of mine is very high, but his business risk is very low. Second one, financial risks. Now, for example, there are two companies, okay? First company is taking too much amount of debt, too much amount of loans, and the second company is taking loans in a very limited fashion. Now whose business do you think is at higher risk? This, because this company is taking too much amount of loan and therefore it has to give too much amount of interest on that, right? And too much of interest payment will make it in losses, and losses may make the company shut down. So there is a big risk in company A as compared to company B, because it will have less amount of interest to be paid and therefore it will generate good amount of profits. Coming to the third one, legal and statutory risks. Now these are the risks associated directly with the government. For example, the recent example, the ban on the Chinese apps like TikTok, the most amazing example. Now this was the decision of the government for banning all the Chinese apps, and one of them was TikTok, right? Now TikTok's business in India went down and it became zero, and this was the biggest risk associated with TikTok in India because it was a Chinese company. So the risk was very high, and due to government's legal action, it had to close down its business in India. Coming to the next one, internal process risks. Now suppose if my company is not doing any invention, it is only having few products and it is very much satisfied with selling those products. But guys, this environment or this market is very competitive. There are new products coming into the market every day. So to sustain my own company, I must innovate my products every day, or I must put a good amount of money in research and development. Otherwise what will happen is that my competitors will make innovations and they will bring out good products or the best products which consumers will like, and therefore consumers will never buy my products, correct? And in this way my business will go down, and this is nothing but your internal process risks. Example, Nokia was one of the leading brands in the past, but its innovation or its technological developments were very limited, and that is the reason its market share went very down. And this is nothing but your internal process risk to the company. So these were the different kinds of risks associated with any kind of financial investment or any kind of business. Now in future, if you are planning to invest in any financial instrument or any company's business, then please analyze what all risks are associated with that and then only go ahead and invest in that financial instrument. Otherwise, do not. Don't get into the trap of 21 दिन में पैसा double, because these kinds of schemes do not exist at first, and if they exist for you, then please stay away from them, because here they will show you high returns but there will be infinite number of risks involved. Okay guys, and finally, if you like my content, then give me a thumbs up and subscribe to my channel. आज के लिए बस इतना ही. Until then, happy Navratri, take care and bye bye.